Well, if you're in the market for a new home, you might want to rethink that purchase because the Bank of Canada governor had this warning for Canadians today on home prices.
Canadians need to be prudent in taking on new debt. It's important to understand that the recent rapid increases in home prices are not normal. Even without a shock, some of the factors that cause prices to rise fast could reverse later, and that could leave some households with less equity in their homes.
Here's the average price of a home in Canada. It stands at close to $717,000, up 31% from last year, and that is the biggest annual gain on record. So is the real estate market a bubble that's about to pop? We've asked that question many times. Peter Armstrong is the CBC's senior business correspondent, and John Pasalis is the president of Realosophy Realty in Toronto. And Peter, I want to start with you. Just break down this message and whether it is unusual to hear a Bank of Canada governor using that kind of language.
I think in most cases it would be unusual, but it's become very normal, David. And he's to be honest, these are stark numbers and these are strong messages. And I think most people who know anything about the Canadian real estate watched this news conference and went, no guff. We know this. This has been a problem for a year. The problem that we've all been talking about, and John has been talking more eloquently and longer about this than I, the question's not what's going on, it's what do we do about it, right? In a normal circumstances, you'd drop the interest rates and that would take some of the steam out of the market. And then we can start to figure out what's really going on from there. But those low interest rates are hard at work, kind of spurring on the economic recovery from COVID. So how do you balance that out? And I think the concern is that, yeah, you're right. 31% year over year growth, that's not sustainable. That's not healthy. That's not good. But how much of that is noise or just sort of this past weird year? And how much of that is a sustained sort of burst of growth in the broader real estate market? And we're already seeing things start to calm down a little bit in terms of sales volumes and prices. So yeah, it's unusual, but these are incredibly unusual times.
John, you have noted there's a large proportion of investors buying up real estate. Is that an ongoing concern?
The bank hasn't flagged it as one. Certainly we're in Canada, we're well over 20% of homes and transacted are being bought by investors. The challenge with a high proportion of homes being bought by investors is, of course, they elevate home prices. Investors usually will pay a lot more than home buyers. And then the other risk is that if we do see a downturn in the future, investors are the first ones to kind of pull out of the market as soon as they see prices start to fall. So the higher the share of investors there are in the market, it typically is the more vulnerable your housing market is.
Okay, so what should the Feds, what should various authorities out there be doing more?
Well, if we look back to about 5 years ago, the Bank of England in the UK kind of raised high rates of investors as a vulnerability for their market. And what they ended up doing is the UK government effectively put in a number of measures, including a 3% land transfer tax on properties bought by investors. They reduced the amount of interest that can be deducted on mortgages, on your finances, to make the numbers look less attractive. So they tried to put in policies that make houses or single family homes specifically less desirable for investors. So they end up seeing more homes being sold to home buyers rather than investors. So those are the types of measures potentially the federal government could take in the future.
So, Peter, if you were to walk out your door and walk to the house that has the for sale sign nearest you, what do you say to the people who are looking out of car windows, biking by, thinking, I'll put in an offer?
Now, hold on to your hats, I think is all you can say. Because look, the things are already starting to cool, and we're seeing that in the housing numbers that have come out, in batches over the last couple of weeks. Talking rationally about housing in this country, let alone in a city like Toronto or Vancouver, has been a difficult thing to do for a long time. The weird thing, or one of the many weird things about the last 13, 14 months, has been that I can actually understand that sort of buy chain over the course of the last year, that you've got people in condos that said, I don't want to live in a condo during a complete lockdown, and they moved into houses. And people in small houses said, I don't have enough room here if I have to work from home, and they bought bigger houses or a house with a yard. And people moved out to the suburbs, and people moved into smaller towns where they could get more bang for their buck. And that's why we've seen it's not just Toronto and Vancouver going up, it's all over the country. And so the question is, for those people that are sitting outside of a house with the for sale sign, is what happens when things start to get back to normal? And are you buying at the absolute craziest top of a market, or are things going to continue? Because David, you well know, we've been talking about a bubble in the Toronto real estate market for the entirety of my adult life. I don't know what's happening, but I do know that I can understand the rationality of people making purchases with low interest rates, and so they can borrow more for longer over the last year. My question is, what's going to happen when we started getting back to normal?
Yeah, and John, I mean, even when things get back to normal, even right now, there are buyers out there who say, I've heard the warnings, and yet it's never happened. So why should I worry now?
Yeah, I mean, and I think that's the tough problem with some of the trends that we're seeing. And one of the red flags that the Bank of Canada actually raised, they talk about extrapolative expectations, which is effectively this idea that I need to buy now because if I don't, home prices are just going to keep going up. And I think it's a tough position to be in as a home buyer because we heard all the red flags that the market's going to tank. It didn't. Prices went up 30%. So there's this expectation that prices will keep going. The best thing buyers can do is just not overextend themselves, so they're at least prepared for a potential, turnaround in the economy in the future, and don't need to sell their homes if that happens.
And the Feds did today sort of expand the stress test, the amount by which you would need to qualify for the interest rate. Do instruments like that help?
Well, yeah, I mean, and that's exactly what it's trying to target. I mean, when we look at what the Bank of Canada is saying, they basically highlighted that the people that are most vulnerable, the ones that are borrowing more than 4.5 times their household income, combined with people who are making very small down payments on homes. So when you increase the stress test, you effectively are trying to reduce the amount of debt people can take on. And that, in effect, effectively lowers kind of the risk in the housing market and the broader economy. And that's really what they're trying to do with that.
But Peter, I think about, millennials in particular who are out renting right now. There's a lot of them who are going to see houses that are 4.5 times or more their household income.
Oh yeah, look, this is not good or healthy or, it's frankly sometimes a little terrifying when you look at the numbers around this market. And I don't know what to tell those young people. And I don't know what will be done. The balance in Canada's, but every real estate market, and there's 1,001 memes out there and great videos of people doing a funnier job of this than I'll do. But you want to try to do something to make housing more affordable, but you don't want to do anything to make the houses that all the old people own any less valuable because they're banking on those to have a retirement. That's the paradox, and that's the riddle that needs to get solved. And the solution to it is build more, stop building shoebox-sized condos, build family-sized apartments, build affordable housing, build that sort of middle chunk that needs to get done. But that isn't a federal responsibility. That's a provincial responsibility and a municipal responsibility that goes across the country with multiple levels of government. And that's the hard work. That's not the easy, sexy stuff of saying we've got a policy, we're going to fix this. That means actually putting in years of effort to try to solve the problem. And thus far, we're just not there.
Peter and John, thanks so much for the great chat.
You bet. Nice to see you both.
Thank you.
Hi, I'm Vashi Capellos, host of Power in Politics. See more of our show by subscribing to the CBC News channel or click the link for another video.